2026 has more risk in AI than it does in Bitcoin, right? There are all these concerns about the AI bubble of circular revenue. There's pushback from Bernie Sanders is saying we should ban AI or something, right? There's more risk in that ecosystem than when I look at Bitcoin and ask myself, will the government print more money next year? Yes. Will liquidity conditions become looser? Absolutely. Will institutions keep buying Bitcoin? Yes. I just don't see as much risk in this ecosystem as I do in the AI ecosystem. I'm bullish on AI, but there's a lot of debate, discussion, concern, CDS rates spiking on Oracle debt. I don't see that in Bitcoin. I just see sort of slow positive trends of regulatory progress, raising concern about the debasement trade, institutional adoption. I don't know. I think this trend that we've seen the last few months is just going to continue, and feel pretty strongly about this prediction.
For more than a decade, Bitcoin investors have lived by a simple rule: the 4-year cycle. 3 good years, 1 brutal pullback. Rinse, repeat. Entire trading strategies, market narratives, and even emotional expectations have been built around this rhythm. But according to Matt Hougan and Ryan Rasmussen, that framework is no longer just outdated, it's actively misleading. In this conversation, they lay out a bold thesis. Bitcoin is entering a new era, one defined not by speculative cycles, but by institutional demand, regulatory clarity, ETF adoption, and macroeconomic reality. They present 5 major predictions that together paint a picture of a crypto market that looks far more like a mature asset class, and far less like the volatile experiment many people still imagine.
Prediction number 1, Bitcoin will break the 4-year cycle and set new all-time highs. Bitcoin has historically moved in 4-year cycles with 3 significant up years followed by a sharp pullback year. 2026 should be a pullback year. We don't see that happening. Tell me more about that.
Yeah, I'd love to kick it off. I mean, look, everyone's focused on Bitcoin's 4-year cycle. Again, previously, we've operated in this world where you have 3 strong years followed by a pullback. So everyone's wondering if 2026, which would be that pullback year, is actually going to be down or up. We think that it's very important and that it's very likely that Bitcoin has an up year in 2026 and finally breaks free of this 4-year cycle. We think that there's a number of reasons why this would happen. And I would just note that if Bitcoin ends the year down in 2025, which it currently is, that may already break the 4-year cycle. But nonetheless, I do think that there's a bunch of systemic and fundamental reasons why Bitcoin should break the 4-year cycle in 2026. And we're in this, prolonged bull market that's driven higher by a constant bid from institutional investors, regulatory clarity and adoption and momentum, and new ETF launches, and favorable fiscal policy, and all of those things that should push the market higher in 2026. On the other side of the equation, the things that have previously caused these massive pullback years in year 4 of the cycle are no longer as big of a factor, in our opinion, now as they were 4, 8, and 12 years ago. Those are things like built up leverage in the system. We had a lot of leverage washed out in October. We think that we're relatively low leverage today in the ecosystem. Another thing that's historically caused these big pullbacks is the lack of regulatory clarity, and therefore a proliferation of unregulated crypto companies. Think of Mt. Gox, think of FTX, which have ultimately led to poor practices that wound up with investors losing their money and therefore markets crashing in this major unwind and pullback. And so we think that those things are less of a factor, as well as the halving, which is another thing that a lot of people blame the 4-year cycle on. Math would just tell you that every 4 years, the halving becomes less of an impact than it was the prior 4 years and the 4 years before that. And so if you boil it down, we see a lot of positive momentum from institutions and regulation and ETFs and institutionalization of crypto. And then on the other side, we don't see those huge black swan risks hanging out there that could cause this reset in 2026. So that's my take on it. Would love, Matt, if you have any other thoughts on that I didn't hit.
Yeah, no, I think that's right. I think, look, the 4-year cycle is a dead man walking. It's gone. It just doesn't know it yet. It's being replaced by a 10-year grind higher. And the simple reason was what Ryan said. The factors that drove the 4-year halving are no longer that important. What's important is regulatory progress, institutional adoption, et cetera. The 4-year cycle is not a law passed down from God. It doesn't need to happen. It happened because of specific reasons. Those reasons are no longer relevant. And we have much bigger forces in institutional demand, regulatory progress, the debasement trade, government spending. Those matter more than Bitcoin halving at this point. And so we think, regardless of what happens this year, I don't want to break this cycle the wrong way, which is what Ryan said we're doing. I think next year is a positive year. It's an up year. And that's why the second half of this prediction is we'll set new all-time highs.
Matt Hougan and Ryan Rasmussen believe that Bitcoin is not only breaking free from its historical 4-year cycle, but that this shift will ultimately drive prices to new all-time highs. Their conviction does not depend on short-term price action or whether Bitcoin finishes the current year up or down. Instead, it is rooted in a deeper transformation of what actually drives Bitcoin's market value today. In previous cycles, Bitcoin's price was largely fueled by speculative retail demand, leverage, and hype surrounding the halving. Those forces created powerful rallies, but they also laid the groundwork for brutal collapses. Today, that dynamic has changed. Bitcoin is increasingly driven by structural and institutional forces that operate on multi-year timelines rather than emotional market swings. These forces do not disappear after a single strong year, and they do not unwind overnight.
Bitcoin, prediction number 2, Bitcoin will be less volatile than Nvidia. I mean, listen, guys, that's a pretty bold prediction, especially that AI is the hottest topic, right? That's what everybody's talking about. We even at Milk Road, we've created an entirely other show and newsletter and everything about AI to cover this shift. But you guys are saying that Bitcoin will at least be calmer in a sense in terms of fluctuation for investors.
Yeah, there are a few things to this that I would love to point out. The first is look at that chart. Bitcoin's in green. It's already calmer than Nvidia. One of my favorite things about crypto is things that people believe are true because they used to be true, but are no longer true. I think there's a lot of alpha in sort of exploiting that anchoring bias. People believe that Bitcoin is used by criminals, no longer true, was true, no longer true. There's alpha in that. People believe that Bitcoin is not held by institutions, was true. Today, Harvard, the Abu Dhabi Sovereign Wealth Fund, other institutions all own Bitcoin. People believe Bitcoin is extraordinarily volatile, orders of magnitude more volatile than stocks, but the data doesn't lie. It no longer is. And the reason for that is it's been hugely de-risked. We've moved government regulation risk, liquidity risk, ETF adoption risk, a bunch of technical risk. It's been hugely de-risked, and that's reflected in the market. So we think there's a lot of alpha in realizing that. And then the other thing I would say is just objectively from where I sit, 2026 has more risk in AI than it does in Bitcoin, right? There are all these concerns about the AI bubble of circular revenue. There's pushback from Bernie Sanders is saying we should ban AI or something, right? There's more risk in that ecosystem than when I look at Bitcoin and ask myself, will the government print more money next year? Yes. Will liquidity conditions become looser? Absolutely. Will institutions keep buying Bitcoin? Yes. I just don't see as much risk in this ecosystem as I do in the AI ecosystem. I'm bullish on AI, but there's a lot of debate, discussion, concern, CDS rates spiking on Oracle debt. I don't see that in Bitcoin. I just see sort of slow positive trends of regulatory progress, raising concern about the debasement trade, institutional adoption. I don't know. I think this trend that we've seen the last few months is just going to continue, and feel pretty strongly about this prediction.
I like that. Okay, and that kind of lends to the prediction number 3, which is ETFs will purchase more than 100% of the new supply of Bitcoin, Ethereum, and Solana as institutional demand accelerates. Kind of like what you're saying, Matt, right? Is that people still have this misconception that it's like, hey, institutions don't own any crypto, and that couldn't be further from the truth. And you guys are front row center with that. Obviously, with your ETFs, you're seeing, who's buying, and I've asked you guys in the past on recent episodes too, like, tell me about that institutional demand going into 2026. So I feel like this is barely even a prediction. This is like this is you guys know that this will happen. Ryan, is that true? Like people are that this almost to a fact that this is very likely to happen?
Yeah, I would be shocked if this didn't happen. And similar to Bitcoin being less volatile than Nvidia already in 2025, this is already happening. Crypto asset prices are broadly set by supply and demand. And one of the reasons that we're so bullish about the long-term outlook for crypto is that we think demand from institutional investors will continue to outpace supply for years to come. We've seen that happen already since ETFs launched back in January 2024 with Bitcoin and July 2024 with Ethereum. And anyone who has read anything about economics knows that if demand outpaces supply, that means price goes up. And we've seen that play out. We've seen something like 2x, which you have here on the table on your screen, of Bitcoin being purchased by ETFs versus new Bitcoin being produced since the ETFs launched in January 2024. And in that time, the price of Bitcoin is up something like 95%. So it's a relatively simple equation. And to your point, we spend every single day at Bitwise doing tens of thousands of meetings a year with institutional investors. And what I can honestly say from those conversations, and what you can see when you look at flows into Bitcoin, Ethereum, and Solana ETFs, is they are allocating more and planning to allocate more to crypto in the future than they have today and they have in the past. And that is why we believe that this fundamentally will happen as institutional demand accelerates, and that will drive prices higher.
I like that. I like that a lot. I'm just going to go right to prediction number 4 because this one kind of sucks the other two into it a little bit, which is crypto equities will outperform tech equities. Do you guys mean this from like, is this a veiled shot at like a potential AI bubble, or is it just simply that it's like even, you know, totally Nvidia and Google and everybody could go up another 20 or 10 or 20%, but even Bitcoin going back to all-time highs and then going above that would be a 30, 40, 50% return? Maybe Matt, you can take this one and explain a little bit.
Yeah, I mean, it's more the latter. Look at that chart, right? It's been doing it. If you think about tech broadly, what are the areas that are growing the fastest? AI is growing extraordinarily fast, and crypto is growing extraordinarily fast. I mean, this is just a market where the underlying industry is growing at something like 60% per year on average. It's a great market to build a company in. And then the reason specifically we think it will continue, or at least I think it will continue, or maybe even accelerate in 2026, is we're seeing crypto now integrate into the real world, right? We're seeing the growth of stablecoins. We're seeing the growth of tokenization. We have Coinbase launching prediction markets. We have, Figure doing a lot of very interesting things. We have Circle doing extraordinarily well. Those are all trends that I'm just very confident in will grow significantly. We could see stablecoins double next year, right? That wouldn't surprise people. What other industry are you talking about 10, 20, $30 billion companies where their underlying market could double next year, right? They're just, the world discounts this for some reason that's not clear to me. They're like, crypto, somehow we don't believe it. Scott Bessent is telling you that the stablecoin market will 12x over the next 3 years. Much of that value will accrue to companies building stablecoins. They're part of, like, it's just not that, this is not an extraordinary prediction. This is one of the fastest growing areas of tech. Investors will reward it. Valuations are still compressed. We're pretty bullish. I think it's just a good story.
And you guys have one bonus prediction here to wrap us out. Bitcoin's correlation to equities will fall. Interesting. So this is something we cover a lot on the show, especially the last couple of weeks, is that, you know, is this really what crypto wanted, was to be so heavily tied to the economy, right? And kind of move with it. So you guys were saying that you're finally going to see it take off and soar on its own, correct?
Yeah, I think as you look into 2026, the factors that matter most for Bitcoin, there are macro factors that matter, that influence the stock market. What happens at the Fed level matters, what happens from liquidity matters. But I think what matters more is regulatory progress, institutional adoption, and crypto specific factors. I think those will be relatively more important in 2026 than in 2025. That's the chart of correlations. You can see they're relatively elevated versus historical norms. I don't think we'll go back to 0, but I think we could be closer to 0.3 or 0.25 than we are to 0.4. The thing that's important about this, LG, is that you have to stack our predictions, right? You're looking at, we think we'll set new all-time highs next year, driven by institutional demand. So price will go up. We think volatility will be down. It'll be less volatile than Nvidia. We think correlations will be down. The combination of good returns, lower volatility, and lower correlations is magic for portfolio allocators. It's magic for institutional investors. So we think crypto is just going to be a great asset for portfolios in 2026 because it's going to have those 3 characteristics.
The message from Hougan and Rasmussen is clear. Bitcoin is growing up. It's moving from a speculative experiment into a strategic asset, from cyclical chaos into structural demand, from retail-driven hype into institutional portfolios. If they're right, The next chapter of Bitcoin won't be defined by crashes and recoveries, but by steady adoption, declining volatility, and sustained price appreciation. And that may be the most bullish signal of all.